strategy MSTR is buying Bitcoin way faster than we can actually mine them. They are on track, according to Chase Palmieri, my guest today, they are on track to hit 2 million Bitcoin on their balance sheet. And those 2 million Bitcoin on their balance sheets could drive them to be a $2 trillion company within the next 5 to 10 years, potentially outperforming Bitcoin itself by more than 2x. I always thought strategy is kind of a 2x lever to Bitcoin. And so today I'm going to deep dive with Chase Palmieri very, very, very in detail where strategy currently is and where it's headed, and dive into all the different charts. If you want to figure out if strategy is an interesting buy right now, this is your episode. Enjoy. I want to spend today about actually strategy because this is the most interesting for me. Just to get us started, how have you seen the development in the Bitcoin Treasury world, especially also with strategy?
Yeah, well, it's no secret that most of the Bitcoin treasury companies are getting pretty beaten up during this pullback or start of a bear market, whatever you believe the long-term drawback period will be. But one thing is certain, that strategy has found sufficient product market fit with STRC, and I know we're going to get into it, but they have found sufficient product market fit to the point where they're actually accelerating and scaling here amid a bear market. So where traditional finance folks were looking at strategy and saying Saylor's going to have to sell coins, they're going to get liquidated, which is a complete misunderstanding of the capital structure. If anything, what we're seeing is actually strategy building a track record amidst a massive pullback and a bear market that is actually going to accelerate their digital credit issuance strategy and just the overall um, accumulation of Bitcoin to their balance sheet once we start ramping up and people are getting more bullish on the asset, and their MNAV expands, and just a enormous amount of tailwinds at the back of strategy and STRC that I'm really excited to kind of share some far out predictions on later today.
That's really exciting. And yeah, I've also seen like in the 2022 era of strategy, they had a year where they had almost no, like very little the new Bitcoin. I think it was like 2022, the year where they had not as much new Bitcoin accumulation, and it was this down year. And I think a lot of people thought that's kind of like the history. Like if Bitcoin price is booming, they can buy more. And if Bitcoin price is not booming, they can't buy more. Now here we are at what, 40, 50% from the all-time high down. And they're buying, I think I've seen it. It was like 974 Bitcoin per day in 2026 so far. If you take the average of how many days there are and how many buys they did so far with the latest one. And the stretch live count, that always gets me. It's like, if they can keep on accelerating, like how many Bitcoin they can buy in a low sentiment bear market, it really blows my mind, to be honest. And when I saw Stretch for the first time, I was like, that's an interesting product, like telling that down. But maybe before we get into the specifics, for the people that aren't as into strategy and Stretch, maybe let's start off with just the question of what is strategy actually doing? And yeah, let's just start up with strategy, what they're kind of like doing and trying to do in the Bitcoin ecosystem.
Yeah, I'll run through a really quick kind of timeline of the company, but basically, this is a company that's been publicly traded for 25 plus years. For most of it, with Michael Saylor as the CEO. He's the one of the co-founders, but he was CEO until recently becoming chairman and giving up the CEO position to Fong Li, his previous CFO. And they were a business intelligence and AI company, helping companies basically with logistics and these types of things. But it was a very limited market. They were competing with Microsoft and other players, not only for their employees who were always being poached, but just the clients in general to generate revenue in that market. And They came to a moment in time during COVID where they realized that a large money print was basically going to devalue the 500 million of cash that they were sitting on, and they decided, well, we have to do something with this cash. They were open-minded enough to explore all options: real estate, gold, silver, all precious metals, but Bitcoin was one of them. And they correctly identified the opportunity was Bitcoin as the superior store of value asset, especially in an inflationary era that we're entering. And so they ended up plugging 250 million of that into Bitcoin. That was just a pure cash buy. Next, they, what you can call the start of their Bitcoin Treasury era, where they borrowed on convertible notes at 0 to 1% interest. They raised another roughly a couple billion doing that. But the problem with those is that the principal has a maturity date. So they are able to raise the money to buy Bitcoin at very low interest, but they have to return the principal payment at a later date. And that'll make sense when I mention STRC in a bit. The other downside to that is that they had fully tapped that market. There's just a limited amount of capital that they could raise through that structure. So then they started experimenting with other things such as at the market issuance (ATM), where they would actually issue shares of their own stock whenever their company was trading at a premium to the Bitcoin on their balance sheet, basically creating an accretive uh, stock printing strategy to raise capital to buy Bitcoin. And because they're a publicly traded stock and because they have sufficient volume in their core ticker MSTR, they're able to raise a lot of capital to do that. But what they've found is really this incredible product market fit with STRC, which has only been live for about 8 months. And one of the things that I think is important for people to understand is what they're trying to do is give all of these other pools of capital a way to funnel into Bitcoin. But the problem is these other pools of capital specifically are turned off by the volatility of Bitcoin. Um, and Sorry, I had a couple notes here. Yeah, the current pay and the volatility. So with Bitcoin, you have to hold the asset for at least 4 to 5 years to really make sure that you're in the green, and you are taking on massive volatility in the meantime. And a lot of capital does not like the volatility risk or the lack of current pay. So what Seyr and team did with STRC is they basically created a product where they could provide current pay in the form of these monthly tax-deferred dividends and almost no volatility, now sub 4% volatility in this STRC product that is meant to stick as close to par at $100 per share as possible. It sometimes falls below, it sometimes goes above, but the idea is that when it's above $100 per share, MSTR or strategy can actually sell STRC, issue credit, and with it to bring it back down to $100 per share. And when it falls below $100 per share, they actually increase the dividend to attract more capital to bring it back up to $100 per share. So it's this kind of floating variable rate, but an incredibly impressive 11.5% yield with monthly payments and tax deferred, with a massive 5-to-1 collateral base underpinning it, which is just a far superior product in the market for fixed income investors, which is a $100 trillion market. So a far superior product to anything like private credit, where you're taking massive, operational risk and lockup periods, bonds where you have to trust the government, and the government's job is to try to basically print at just above or the yield of bonds so that they can kind of soft default on the national debt, to things like pension funds, et cetera. And so this is a massive market that is now indirectly buying Bitcoin, and Strategy, the company, is basically performing an arbitrage in the capital markets where they're willing to pay you 11.5% annually for capital that they're going to use to buy Bitcoin. And because they believe that Bitcoin will perform over the next decade plus at somewhere around a 30% compound annual growth, they're comfortable underwriting that risk And basically all of the upside above that 11% annual dividend is captured into the MSTR shares. So that's what makes MSTR shares, for shareholders like myself, it becomes an accretive situation where if I buy one Bitcoin and I buy one share of MSTR, the difference is that a year later, my one Bitcoin is one Bitcoin. That's great. Everybody should have a position of cold storage spot Bitcoin. But if I hold MSTR, my one share of Bitcoin might have started out at, 0.001 Bitcoin equivalent, and now it's 0.0018 equivalent. And the idea here is that the shares of MSTR are actually accreting more Bitcoin per share over time. And if what strategy and most Bitcoiners believe is that, you know, companies will be valued to some degree on Bitcoin per share, or that it is a kind of a new modern metric of something similar to net income per share, that is a really great way to get Bitcoin exposure and what strategy would call levered Bitcoin exposure if you're comfortable taking the custody risk that MSTR is actually holding the Bitcoin, and you're comfortable with the operational risk, which the proof of STRC's scale and attention and ability to remain near par during this bear market, I think has actually shown that there's very little operational risk to strategy's current strategy.
I love the strategy, current strategy. Um, I just showed you this. I think I put it in there. I found this illustration so helpful to understand what strategy actually is doing, because for me, I like charts that are simple and explain a thing very easily. And so, as I understand it, we have Bitcoin, which Seyr calls digital capital, and he expects Bitcoin to have around the 30% AR over the next, I think, 20 years was his time frame. And so, if he can give people a digital bank account, which is digital credit, that pays people around 11 point, I think 5 is now. I think they turned it up 25 basis points to 11.5. There's a little bit of older screenshot. And they give people this 11.5% yield and keep the equity at par around like I think 5 or 4% volatility or whatever they have. I think also he posted today that the Sharpe ratio of stretch is today over 3, which is a really, really interesting thing. We can get into that. And what I found now interesting is the excess return that you have from the digital capital to the digital credit, kind of the difference to that gets to be accretive to be in the digital equity, which then makes sense why digital equity will outperform the digital capital, because you have a positive Bitcoin yield. And so many people argue like, oh, it's like was it what's the word if the stock
Delusion.
delusion, yes. I wanted to say delusional. It gets diluted, the stock gets diluted, but it cannot be diluted if you increase Bitcoin per share. So like per share, you get more and more Bitcoin. And so this means basically the Bitcoin yield. So if the Bitcoin yield is going up over time, you have to have you can't do it in a dilutive way. And so this chart really made it like click for me when I researched and watched their earnings call of like, oh, okay. So they use that digital capital. They give people what they really want. People don't want like 50% crashes. They want the bank account that just pays them 11%. And they get the 20% difference between the 30% and the 11% and put that directly into equity. And every time the stretch is kind of like on a high volume, and they kind of can pay and they can get Bitcoin from that, they can put the ATM on. And we can also later see the STRC live website, which I found very entertaining and interesting to watch. Then they can buy Bitcoin with that, and additionally have some equity raising also in MSTR. I think there's like some 30% rule with like one stretch, like they have to issue also something on the strategy side. I just want to throw that in that like I found it really fascinating this chart,
Yeah.
the strategy working.
Yeah, leave that up for one sec. So what's a way to look at this is the gap between the digital credit and the digital capital moves up and becomes the gap between the digital capital and the digital equity, right? Whatever
Mhm.
that difference is, it moves upstream into the digital equity. So you can imagine here, let's say, let me give you kind of a bullish scenario. Let's say interest rates start to drop and the digital credit STRC has a greater and greater track record. Strategy gets included in the S&P 500. Their credit product gets rated, and basically the market starts to look at STRC as a de-risked version of its current instrument. You can imagine that if rates drop significantly, then there's going to be enough demand for STRC, especially as AI is destroying white collar jobs. And these folks who perhaps don't believe that they're going to be able to find jobs or get the same pay that they did over the last decade, they're going to be looking at fixed income. You've got a boomer generation retiring, and they're going to be looking at the best fixed income product that they can get. And then you even have corporations who are going through, this really turbulent period where their business models are being disrupted every week by a new Claude AI release, and they're going to want some kind of fixed income or reliable, resilient cash flow on their balance sheet to make sure that they can continue to fund operations. I think there's a massive uh, waking up that any fixed income investor is going to look at something like STRC, this 5-to-1 collateralized instrument that with a growing track record and even a track record now in a bear market. And if interest rates fall, you can imagine that STRC could have an equal amount or continue to scale demand at something like an 8.5% yield in a couple of years. And if you imagine that interest rates falling and AI, uh, creates deflation, and then governments have to print money to keep the deflation from disrupting our levered fiat-based debt spiral, then you can imagine asset prices soaring, which would be captured by the digital capital, Bitcoin. And so you can imagine already where the digital credit gap between the digital capital gap increases because digital capital is going up at a higher ARR than 30%, and the digital credit can be issued at a lower yield of, say, 8.5%. Now that means you've taken that larger gap and you can extend it into the gap between the digital capital and the digital equity. And so you could see a world where digital capital is performing at 50% ARR. And that gap has increased to the point where now the digital equity is doing something like a 75% ARR. And I actually think that's where we're going, and this is all made stronger in a bull market. So the fact that we're seeing these massive STRC digital credit issuances and capital raises in a bear market downturn with STRC still sitting at around $100 par, it is incredibly bullish for the business model when we enter back into a bull market and the MNAV of MSTR expands to the point where they can issue MSTR at more accretive levels because they still always have that lever. Now they just have two levers to create the accretion to the underlying shares.
What is actually how do you look at like how much strategy could potentially outperform Bitcoin? If we see now this chart is like not quite a 2x, but whenever I look at strategy, whenever I look at Bitcoin, it's like usually the like rule of thumb like a 2x of Bitcoin. Is that kind of like a rule of thumb that you're looking towards if strategy continues to execute, Bitcoin continues to work, and everything is like continuing as it is? Obviously, with every stock, there are risk factors, but if everything goes according to plan and is executed well, that around the 2x multiple of what Bitcoin will produce, strategy might absorb.
I think 2x is conservative because there's still so much confusion around what strategy is doing. I mean, you yourself have been deep into Bitcoin, and it's only recently that you decided it was worth the time to set aside and go down the strategy and STRC rabbit hole. And there's just so much capital that still thinks that this is a Ponzi scheme, that Saylor's going to get liquidated. They just really have not taken the time to understand the mechanics at play here. So I believe that the more long-term MNAV for strategy is going to be around 2 to 3. That means that they're going to be able to make this model an even faster accretion mechanism. And so I think it's fair to expect a double in performance for MSTR shares over Bitcoin over a long time horizon. Because again, when you have a drop or a pullback like this, it is levered Bitcoin. So you're going to get a bigger downturn. But then once you enter the inevitable bull market scenario again, then I believe you're going to see outperformance above 2x to the upside. And we've talked about this. I mean, if strategy owns the most Bitcoin and they are quickly becoming the primary mechanism where all other capital pools that can't take direct Bitcoin exposure are getting their Bitcoin return, Bitcoin fueled returns from, because they have the biggest collateral base and track record. And, once they're S&P 500 included and they have credit rating, I mean, all of that suggests that strategy is going to be the dominant winner in the Bitcoin space, and the floor price of MSTR shares is always going to grow at around or at least Bitcoin's CAGR. So if you believe a 30% Bitcoin CAGR, then you're saying, okay, MSTR, as long as they're not doing dilutive transactions, we're going to grow MSTR at least 30%. So any company that has that level of growth, especially when every major tech stock is being disrupted by AI right now, I think you're going to have traditional equity investors wanting the exposure through MSTR. You're going to want the fixed income market wanting exposure through STRC. And in general, we're going to see, looking back 10 years from now, that this bear market solidified the success of this strategy.
I have another chart for you, and I found this is almost like I think they're conservative with those numbers here, but I'm curious what you think. That's one snippet of I think the last to last earnings call they did, and I think from Liu talked about what kind of situations they could see in when they do the digital credit sales, the dividend rate, and all of those things, how the annual BTC yield will grow. And obviously, if you already have 738,000 Bitcoin and 3.5% of the supply, it gets harder and harder to produce a very big BTC yield. It's easier for smaller treasury companies to have like a 20-30% Bitcoin yield if you start with like 5 Bitcoin. But like 14% Bitcoin yield, is that I see it as conservative, but like, do you also see it as like conservative, especially the way Stretch is currently kind of going? And this is kind of like, if all those things accumulate, that this is kind of like very conservative.
They've been pretty accurate with their forecasting, especially around Bitcoin yield. So I guess I'll just kind of assume that this is a fairly accurate. I don't have a reason to believe otherwise. Yes, there is kind of the law of large numbers at play here, but one thing that is definitely not included in these projections is the idea that Bitcoin might actually be able to have a yield of its own. So, for example, all of the Bitcoin yield that we're talking about here, and all of the net income from strategy is basically now on the basis of Bitcoin's appreciation and their ability to issue these instruments at an accretive Bitcoin per share. But you could imagine that perhaps Bitcoin becomes so foundational to the banking system or modern money that you can have strategy lending it out to JP Morgan and they earn a 3% yield on their actual Bitcoin for lending it out. Now you have this incredibly large stack of Bitcoin that not only is the operating company creating Bitcoin yield, but the Bitcoin that they're sitting on itself could potentially have a yield. A 3% yield on a company sitting on $100 billion in Bitcoin these start to be really significant figures. And of course, the idea would be that they would turn around and take that yield and buy more Bitcoin, which would be even more accretive to MSTR shareholders, which further improves their collateral base, which further allows them to issue more credit. So there's just so many flywheels here, and it's such a robust model that self-corrects. Um, I just I think that this is clearly the most overlooked opportunity in finance today.
If you live in Europe like I do and want to buy Bitcoin the right way, check out Relai. Relai is a Bitcoin only platform with no distractions, no shitcoins, just a BTC. It's also the easiest way I've found to do what actually works, buying Bitcoin on a consistent basis. Relay is also self-custodial. They never have the keys to your Bitcoin. No freezing of your assets, no counterparty risk, no rug pulling whatsoever. I have been a long-term fan of Relay, not only because it's incredible easy to use and very beginner friendly, but also because it just works. If you want to get started with Relay today, click the link down in the pinned comment or in the description. And once you have downloaded the app, type in Robin in the referral code section of the app to save 10% on fees. So set up your DCA Bitcoin plan today with the Relay app and get cheaper Bitcoin if you use code Robin. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer, all 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. You get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Finally, we have BTC Prague back in 2026. And this year, I'm not only speaking on a panel, but I'm actually going to present an interesting new angle, a perspective, a Bitcoin thesis at BTC Prague this year for the first time ever. I've never done that on any other conference, so this will be a fun one. If you listen to this show on a regular basis, I would love to meet you in Prague this year. It's very high signal, no noise, and Prague is just a freaking amazing city with awesome drinks and a lot of good food. Use code Robin to get 10% off, and if you buy with Bitcoin, you get an additional 5% off your ticket price. I'll see you there in Prague. Make sure to come say hi. Yeah, I think so too. I just wanted to bring that chart up for people to have an overview of like how the Bitcoin yield has performed in the past. So we see they have grown the Bitcoin yield in 2025, 22%, in 2024, 74%, which is crazy. And then, yeah, obviously, like 2022 was just 1.8%, which I think mentioned in the start, which was the massive downturn where like they have had a hard time issuing shares and like being in the market, and they were like cautious also, and so it was like not easy for them to raise raise more Bitcoin. And now we're seeing the same thing again. Like the Bitcoin market is similar, not as bad as 2022. Like in 2022, it was a little bit of a harsher crash than it is right now. But we're seeing a similar situation, and they're just like, at it. They're like already have a Bitcoin yield of I think 1.2 or 1.5%, something like that, and it's just like a little bit of the year, and they're already accumulating very good. So I think I feel like they could crush it with the Bitcoin here. But I don't know, like they could really make make a dent here in their own forecasts. Just a feeling that I have.
Yeah, well, one thing that's interesting is you can actually play out a scenario where Bitcoin yield stays completely flat over the next decade, right? And what's interesting is that, and it's crazy to even say this out loud, but we're seeing it now in the market with these latest combinations of MSTR and STRC buys, where they're literally on track over the last 2 weeks to buy 1.86 million Bitcoin per year. That's their pace over the last 2 weeks. This is a finite supply asset that, there's theoretically going to be 21 million. And yes, we're already at the point where there will be less than a million issued over the next 100+ years, but there's not that much Bitcoin in the market to absorb when they go into the market at this pace. And Saylor said it himself, we can buy Bitcoin faster than they can sell it. And they literally are at that point now. They literally are buying more Bitcoin than the new issuance of supply coming online every day, every week. And so you can imagine a scenario where Bitcoin yield stops. It's totally flat, but the buying power of MSTR and STRC in the market as fixed income wakes up to these vehicles is pushing the scarcity of Bitcoin up so much and the price of Bitcoin up so much that your MSTR shares are skyrocketing just because the Bitcoin value of the current Bitcoin per share is increasing in value. So I literally think that strategy is turning a corner now to the point where they can single-handedly push Bitcoin's price up and will continue to do so at scale. And so you don't need Bitcoin yield as long as there's a buyer in the market that is going to push Bitcoin's price up forever.
Yeah, especially I think Stretch is a product that will appeal to a lot of people outside of Bitcoin. I think it will take some time for it to be credited, for it to have like a 1, 2, 3 year track record. And I think I talked yesterday with Dan Hillary from like the True North podcast, and he said there are some big money pools that can only invest in an instrument if it's like 3 years
Yeah.
or longer, or 4 years or longer in the market. And so I think the real power of Stretch we're not even seeing yet. I think the real volume, like we in the, like if you want to say it, you could say like Stretch is still in its rookie year. Right? It's still like a year, the year zero for Stretch, which is kind of crazy to think about.
Yeah, no, it's absolutely right. A lot of capital pools can't even consider, they can't even look at an instrument unless it has at least a 3-year track record. And so the majority of capital is, they might secretly be looking at this and waiting to get interested, but really in reality, their boards, their compliance teams can't even start examining and researching the opportunity until there's a 3-year track record, and we're only at about 8 months. But what's really great about this bear market is that they're showing their track record even with massive downward Bitcoin volatility, essentially dispelling once and for all of these myths that they're going to get liquidated.
I want to show you I mean, you 100% know about that website, but I want to show you the viewers this website, this STRC.live. I want to also ask you about actually competition to Stretch, because there is competition with like I think Strive has the SATA thing out, and I think in Japan, Meta Planet also has a similar product out. I have,
Ours,
yeah, I was like, to be completely fair, I've only researched strategy so far, and I'm not even 100% done yet. So I haven't looked in any other treasury companies yet. But it just looks so interesting because for me, it seems like the preferred stock and all of those things, it's a winner takes most in the jurisdictions they are in. So wherever Stretch is available, they will cover most of that market, because there will be the issuer where the most they have the most Bitcoin. There will be the issuer where there's the most credited, like most TradFi stamped of approved player. And we kind of see it already now where Stretch is kind of pumping the ATM, where at SATA, the ATM is paused and the volume and the price, like even though the yield is better on SATA, the Stretch ATM is just like blowing out of water. And it's like you see it online, and I only see Stretch. I had to dig in a little bit deeper to even be aware there is already competition in the market. How do you view competition now from Bitcoin treasury companies, and maybe potentially even from traditional banks that look at strategy and they're like, "Oh yeah, we can do that. Like that seems like printing money. We are good in that." Like how do you feel of like how do you view like competition to stretch to strategy from treasury companies, but also potentially from other banks?
Yeah, so for the direct competition in the world of digital credit, which is, like we said, issuing some kind of a yield dividend that they turn around and use the capital raised from the principal to buy Bitcoin, and they just try to outperform the yield that they're giving back to investors. The two main players besides STRC are SATA of Strive, and I don't believe it's quite launched yet, but getting ready to launch Mars with Metaplanet. Um, and so there's there's two ways to look at this. So Strive and SATA compete in the same US market. And so SATA has to basically compete by providing a better yield because they don't have the collateral base, the track record, the brand name, the massive volume that strategy has. So the only thing that they can really compete on is yield. So they're basically willing to say, okay, we'll underwrite a 13% yield. And yeah, if Bitcoin performs at 30%, we only make, we make 2% less of that upside than STRC. But this is what we need to do to attract capital to our version of digital credit. What's different and interesting about Metaplanet is they're operating in the Japanese market where there's really, really low yields. So Mars should be able to actually issue digital credit at something like a 6% rate and still capture a lot of demand because other Japanese investors are looking at things with negative yields or 0 to 2% yields. And so a 6% yield is, three times as good as a 2% yield. And so they should be able to attract massive amount of demand for their version of digital credit at a even lower dividend, therefore credit hurdle rate than even what STRC is doing. So there is a jurisdictional arbitrage opportunity, especially in markets like Japan, and Metaplanet seems to be on track to kind of soak that demand up. But then I do think that when you're competing head on with STRC in the U.S. markets and in New York Stock Exchange, your only way to compete is going to be to go further and further out on the yield curve, basically providing an aggressively higher dividend rate. And so if more companies come into the US market to compete with SATA and STRC, you might see things as high as 15 to 20% yields. But now you're starting to risk the downside scenario where Bitcoin isn't able to outperform that credit hurdle rate. And that might actually, you could get to a point where the yield is so high to try to compete with SATA and STRC that it actually scares investors away because now they don't think it's necessarily sustainable. They don't believe that the long-term Bitcoin compound annual growth rate will outperform that hurdle rate. So I actually think there's only room for kind of a few of these players. And even those players, you have to be really trustworthy. You have to establish track record early. You have to have a big enough collateral base already sitting on it, and that's why Strive acquired Semler Scientific. Is even if on paper or at the moment it wasn't that accretive of a deal, they needed to expand their collateral base massively so that they had enough room to issue digital credit, so that the collateral to credit ratio was sound. And so that was the reason for that. And as for banks, I think Seyler is right in what he is predicting will happen next. So yes, banks are waking up to this. Banks are talking to strategy. I think it's very possible that banks just become a layer on top of STRC, similar to what you said you talked to Dan Hillary, what they're doing at Buck. They basically issued a savings coin where their reserve is sitting in STRC, and then they're providing what is still an above market yield to the rest of the world. I think you're going to see something similar with banks, and this is Saylor's prediction, which is that banks are going to use STRC in the background to collect 11.5%, and they're going to turn around and overnight, you're going to see banks compete and say, "Hey, your deposits in our bank, now we're going to give you 8% yield, and you used to get basically nothing for parking your money in the bank. Now you're going to get 8%." That's going to attract a lot of capital in those banks, and the banks can take the difference between that deposit that is getting 8% and the yield from something like STRC at 11.5. That's a really good yield for a bank that essentially has a monopoly on consumer deposits.
There is something interesting, and I want to show you. Wait, I'll put it up. I just read that today, so it will be probably a week old when this podcast comes out. Um, I saw that today here. Loops, here we are. You that Strive, who issues SATA, purchased Stretch. Yeah, I found this an interesting dynamic because usually like Microsoft doesn't buy or like Google doesn't buy Apple phones. I think like that kind of like a thing. I mean, they do have connections, obviously, so maybe it's a bad comparison. But like, how do you see the interconnection there? I was just like curious because I saw it literally today in my feed.
Yeah, well, I mean, you can imagine that perhaps Strive would have wanted to buy SATA, but that's kind of risk on risk. And so they have to go buy somebody else's digital credit. Um, I think my theory is that we're going to see a lot of corporate balance sheet adoption of STRC because even at the scale of a startup, you can imagine a startup raises a $10 million seed round and they park it in STRC, paying 11.5%. You are now basically getting a monthly tax deferred yield that pays for your team's full cost of operations. You basically covered your burn. You have infinite runway now because of the yield from plugging that seed raise into something like STRC. Now take, larger companies that have more balance sheet than, they know what to do with. If they take a portion of it and buy STRC, that yield now funds their cost of operations. All forward looking profits from their own business operations can be used to either buy back their stock, buy Bitcoin, invest in new product lines, or what I really think is going to happen is these companies that are buying STRC are going to, within 30 days, see the value and the reality of that yield being paid out. They're going to see how good it is for their cash flow at a time when AI is displacing a lot of revenue lines. And I actually think that STRC is going to become the new stock buyback because the problem with a major company like Apple buying back their own stock is yes, they're creating more scarcity in their stock, they're sending their stock price higher, but they've not in turn increased their cash flow. And in fact, they've decapitalized the business because when you do that, with call it $100 billion, you've basically removed $100 billion of liquidity in your reserves that you need for resiliency as a company going forward. But when you do it with STRC, this is a liquid ticker with massive volumes. If you ever needed to get your principal back, you could. You've got a yield that is, paying a really incredible dividend, tax deferred. So I actually think that companies are going to start adding STRC to their balance sheets to, as part of their treasury strategy. And once they've seen it perform for a few months, I actually think it's likely that a lot of companies are going to take their profits and they're going to start actually expanding their STRC position. And then as their STRC position expands, the yield from that expands. And I think they're basically just going to continue rolling over the yield from STRC and their profitability from operations into more STRC. Because what's amazing about STRC is it really creates the ultimate financial incentive for all other capital participants in the market to do what is essentially buying Bitcoin.
Now, I 100% agree, and it's super interesting. I want to show you one more thing, um, because I'm just so curious about those things. And just for before we get into this, I just want to explain that to people what the Sharpe ratio even is. It's basically what does the asset return to you minus the risk-free rate divided by the volatility. So meaning like what are you getting as X return compared to what volatility you kind of have to endure. And this is an interesting formula to see how good an asset actually is. And Michael just made the tweet today about the Sharpe ratio of STRC because calling it like a bank account that gives you a yield is almost like an understatement because it has a way better Sharpe ratio than the most successful companies on planet Earth, like Gold, Google. Gold is not a company, but I hope everyone knows that, anyways. Gold, Google, Nvidia, Tesla. Wait, what is QQQ? I knew that.
That's NASDAQ.
Yeah, Nasdaq. There's Apple. What is BND?
What is that? Sorry, a little hard to see.
Oh,
BND?
BND. I don't know, but it doesn't matter.
Maybe
Amazon.
Beyond Right, maybe?
Oh, could be, could be. But yeah, anyways, like it doesn't matter. It's like all those amazing companies that deliver amazing returns, but they are a lot more volatile. And so, like the Sharpe ratio is something that especially traditional investors look at. We Bitcoiners, we might not care. We just like, give me the volatility, give me the ups and downs, the roller coaster. I want my 30% a year, my 50% a year, and I'm good for that. And I see it the same way. I don't really care about the Sharpe ratio when I invest, but I know TradFi cares. I know all those portfolio magicians care about their Sharpe ratios. How significant is that three over 3 point like the 3.8 of a Sharpe ratio from Stretch in terms of like where companies, individuals, and TradFi people in the future allocate capital.
It's massive. I mean, it's really the point of how STRC was designed to not only be a current pay instrument, which gets rid of this like having to wait for Bitcoin's 5-year performance, but this idea of no volatility, the idea that STRC is bouncing between $99 a share and $101 a share. So in the past, in the early days of STRC, when STRC fell below the $100 par price, and I'm going off of some research that Adam Livingston, the Bitcoin wizard, did. But he said that it took on average about 66 days for the par price to reach back to 100. Now we're at the point where over the last, I think, 3 months, when the par price falls below 100, it takes roughly 8 days for it to reach back up to par. You can imagine that as there's more and more demand for STRC, we get to the point where it could just be hours. You know, if Bitcoin falls to $99.20, it within the next couple hours, within a single trading day, it's back up to $100 par. So what that does is you're basically creating an instrument with almost no volatility or as little volatility as possible. And now you're competing with the S&P 500 because you're getting predictable returns that are on par with the S&P 500 with none of the volatility. And I would argue none of the existential risk that AI will play in those S&P 500 companies and the disruption to their revenue lines.
Mm.
Basically, all capital has to seriously consider STRC, and it becomes kind of the tubing, the plumbing for all of that capital that wants Bitcoin's performance, but in a way that they can stomach, this delivers that to every single person that doesn't care about Bitcoin, doesn't necessarily even have to believe in Bitcoin, doesn't have to have any opinion on Bitcoin. They just need to want high yield. And what I think is interesting is that even Bitcoiners like ourselves are starting to look at STRC and we're saying, that might have a place in my portfolio. Yes, we've gotten comfortable stomaching the volatility, but there's something to be said about having a fixed income when AI is displacing white collar jobs. And when you're looking at a bear market downturn right now, but you're already fully deployed and you're saying, would have been nice to have a little monthly income coming in so that I could be DCAing throughout this bear market. So I think income has a role to play in the Bitcoiners portfolio. Folks have often looked at things with higher risk like MSTY, or perhaps they're, trying to flip Airbnbs to try to drive some kind of an income stream. But all of these other fixed income streams are being squeezed or outpaced by true inflation. And here comes a Bitcoin aligned fixed income stream that a Bitcoiner can believe in and could potentially make up a sizable piece of their portfolio.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control. And I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io. Tell them you come from Robin and let's mine Bitcoin together. It's super interesting. I love it. One more thing. There's like a couple of more things actually, but especially on strategy on the common stock. We talked about it last time also, how the stock is just down massively. Uh, and this was actually something that encouraged me to look into strategy. If we would have been riding on all-time highs, I probably would have not been as motivated because I just catch knives all my life. I've never catch a falling knife, but like I got interested the first time in Bitcoin when it crashed down from I don't even know what the high point was, but it crashed down to like 3K in 2020. And then I'm like, oh, okay. If it's cheap, I want to look into it. Like I'm like maybe weirdly wired where I'm like, if something falls drastically, I'm like, maybe there's some um misprice happening and I might catch some yield on that. So I do like catching some knives. And so because I mentioned that specifically because there might be some people out there that think the similar way as me. And I know most people come in when the price goes up and go out when the price goes down, unfortunately. Otherwise, the price wouldn't go down and like wouldn't go up and like all of those things. But I'm one of the persons, and I think you probably Chase also the same way, right? Where I see a stock that I like, and I see a stock that I'm like the fundamentals look really, really solid, and it's down 57% over the last 6 months. So what you potentially have is just like a more than 2x just to get back to the old all-time high. It's just like a massive opportunity. But how do you, and this is a big question, obviously, like everyone do their own financial like uh, education things, do your own research. But how do you model the Bitcoin price? Not the Bitcoin price. How do you model the MSTR price? How do you say like where strategy might go and what you might expect it to return? Because obviously, people like with Bitcoin, a lot of people just also buy it because they like the sovereignty aspect of it and all of those things. But with strategy, you buy that for the financial gain. Like there's no other real reason outside of the financial gain. Maybe you want to just like support them, but the financial gain is probably 99.9% of the reasons why people buy it. So what is kind of your like modeling of strategy?
So one thing that I'll call out first here is, yeah, stock is down over 50%, but I think they have something like 400,000 more Bitcoin on the balance sheet than they did at their previous all-time high. So that should be a little bit of a signal to folks that perhaps we are mispriced here. Um, and one other thing that I didn't mention earlier, and it's related to this drawback, is if you imagine STRC, let's say that they could theoretically jump the dividend more than just the 0.25% per month, which is the limit that they can move the dividend yield per month. Let's just say that the dividend was at 11% and they came out and said, hey, we are now going to offer this yield at 12%. So we're adding a whole 1% yield. If you're issuing STRC and you're willing to take on a little bit higher credit hurdle risk to issue shares at the 70K Bitcoin price because you think we're going to be back up to 120K within the next 5 years, it makes a ton of sense right now to be super aggressive with the credit yield, with the yield to those STRC investors because of the entry price. What's really important is if you're having to outperform that yield, you want to be issuing credit at these levels as much as possible. And that's what we see strategy doing. That's why what looks like a time where you would think that maybe an outsider would think that they'd be slowing down or backing off or they wouldn't be as aggressive. They're as aggressive as possible because they have greater confidence that they're going to outperform the credit hurdle rate at these prices. So me seeing strategy lowering their average Bitcoin acquisition price and aggressively issuing STRC digital credit at these prices where I feel like it's a temporary low, we're going to bounce back. I love that. To me, it's the perfect strategy. And when I think about how to value strategy total market cap, I guess bullish math here. I think that, and I don't need to put a time on it because I'm a long-term shareholder. You switch the L and the D. I'm a shareholder. Uh, I think that strategy is going to end up with, maybe not end up, but I think it's very feasible that strategy holds 2 million Bitcoin in the near future. And I see a near future, call that whatever you want, 5, 10, 15 years of a $10 million per Bitcoin price. So if the company has $2 million of Bitcoin, or sorry, 2 million Bitcoin at a $10 million price, you're looking at a $2 trillion company. Now, you might need to subtract some of the liability there, but just ballpark math, at 2 million Bitcoin held at a $10 million price, if there's no premium, like let's say that the premium to net asset value wipes out the liability that they have in on the balance sheet, we end up with roughly a $2 trillion market cap. What are we trading at today? Something like under a $50 billion market cap, right?
Here we see it at 44 billion.
Yeah. So, run the multiple yourself. I feel like this is inevitable as Bitcoin in many ways.
It's like did I do the math correct? Is it like a 45x from here, or is there
Sounds about right.
serious
Yeah. 2 trillion
45x?
to 50.
Yeah, like it's a 2 trillion into 50 should be, so like 2,000 into 50 should be 40. But yeah, I might be with the math off, but like it's a massive. Was it 400? I might be wrong with the math. Like
Let's see. Yeah. We'll let the audience do the math, but I see 45 billion turning into 2 trillion over the next decade.
that's amazing. Like that's a huge gain in like everything. And so like that's, I think, and this is also an interesting part where um there might be some people sitting out like, oh, but I like Bitcoin because of the sovereignty rights. I like Bitcoin because of I came here for the revolution. I came here for the number go up, and it didn't, and I stayed here for the revolution, and it didn't stay for the the number go up technology and strategy. It seems like, oh, like that's all it is. Um, Maybe we can take the last few like minutes and talk about what does strategy actually mean for Bitcoin? And let's address also, because there are a couple of people. I talked yesterday on a live stream about strategy and stretch, and we were all like really bullish on it. And then there were comments coming in and saying, "Oh, it's bad for Bitcoin. Like, don't buy the scam securities of Seyr." Like those comments, like are like obviously out there, especially when the price is down 60%. But like, how do you respond to people that say strategy is bad for Bitcoin, or like this is not where Bitcoin should end up being? Like all of those kind of like comments.
I mean, like, maybe to start with a bit of an analogy, was just because they refer to this as the iPhone moment, was the iPhone bad for the internet? I mean, the internet is the protocol. The iPhone was the consumer-friendly technology or vehicle that opened up the internet to the masses. So, was the iPhone bad for the internet because people weren't going directly to the internet in some more arbitrary, tech native way? So I guess the way I see it is, yes, everybody should have cold storage Bitcoin, but at a certain point, you don't want all of your wealth at your fingertips. Um, I kind of have a saying that I say, with internal conversations or friends and family. But if all your wealth is at your fingertips, then you risk somebody taking off your fingertips to get your Bitcoin. So I like the idea of having a large cold storage, but then also having some wealth in, things that are on more of a traditional ledger, so that if I get hit by a bus and, my wife, my family can't figure out, the passing on of the keys, or somebody comes at me with a $5 wrench attack, whatever it is, I know that the generational wealth that we have accumulated by being, ahead of the curve on this asset class is going to be passed on to the next generation. So in general, there is value to money at your fingertips, and there's a value to money that's not at your fingertips. Um, what was the other piece there? Why is strategy good for Bitcoin? So, or why is it not bad for Bitcoin? Strategy, if everybody wanted Bitcoin, they would have already bought Bitcoin. Like, there's 15 to 16 years of track record here. It was the best performing asset for like 10 of the last 16 years. The entire protocol is verifiable, right? It's all code, it's all there. If all of these capital pools that haven't bought Bitcoin today wanted to buy Bitcoin, they would have done so. The truth is that not every capital pool can or wants to take volatility and duration risk. And so what strategy has done is packaged a product that meets those capital pools where they're at. It is crafted to fit into their compliance reviews. And what does it ultimately do? It gives those capital pools, those pension funds, those boomers, those retirees, those fixed income investors access to Bitcoin. It empowers the Bitcoin network. It ultimately does what every real Bitcoiner should have understood, which is that for Bitcoin to win, it has to infiltrate traditional finance. It has to become the base layer. And that's what this is it's not that strategy is the base layer for the future of fixed income. It's only possible because of Bitcoin. Bitcoin is the base layer. Strategy is simply a filter that is allowing those capital pools to enter the Bitcoin space, making number go up, making Bitcoin more relevant, prevalent, inevitable, but doing so in a way where we're protecting more and more people from the disgusting fiat inflationary times ahead. But they don't need to necessarily spend the 1,000+ hours to learn Bitcoin, because if we're waiting for the entire world to step into the rabbit hole and take their time, the multi-year process, then they're all going to be too late. There's going to be way too many that were too busy working their day-to-day jobs to ever even approach it. And those people deserve the protection of Bitcoin for their savings as well. And so to me, this is the iPhone moment. I think it's a great analogy. And the iPhone is making, in the same way the iPhone made the internet more prevalent and easier to adopt, strategies STRC is making Bitcoin more prevalent and easier to adopt.
I love that, and I think this is the perfect tip for people to send to if they claim uh, strategy is bad for Bitcoin. As I love your sentence also. What is the iPhone bad for the internet? I think this is because Bitcoin, in the end of the day, is an open permissionless protocol, and if we are now saying there's one guy that can make it bad and can just corrupt the whole network, who no matter who this guy is, then Bitcoin was never what it was supposed to be. Like if Saylor can destroy Bitcoin or like be bad for Bitcoin, then Bitcoin was never what we think Bitcoin was. And so I think everything is good for Bitcoin, especially if you build out great products on top of Bitcoin. And I've talked with so many people in the last 3 months outside of the Bitcoin bubble about the stretch product, specifically because I wanted to get their reactions, especially those friends to me that kind of rejected Bitcoin. There's multiple friends that always loved Bitcoin and like they're grateful that I got them into Bitcoin. But there are those friends that just never got into Bitcoin. And it's like the majority of them. And I always felt like I suck at orange pilling. Like I always like, fuck, like I suck at orange pilling. It was nice to hear also Seda talking about that it's very hard to sell people Bitcoin. They don't want the volatility. They don't want the risk. They don't want the 50, 60, 70% crashes. And you have to be honest, if you are offering someone Bitcoin, it might just crash 70%. You don't know. It crashed 50%. It can crash another 50%. Like it's a possibility. I don't think it's likely. I think we kind of hit bottom now, but like it's possible to go lower all the time because it's an asset that is in price discovery mode. And so having something that removes the volatility and puts on an 11% yield, that's more than product market fit. Like like, uh, like if you call like, everything product market fit, like this deserves a better description for product market. Like that's like beyond product market fit. That's just like something that freaking everyone wants. And, no matter if you're a hardcore Bitcoiner, if you're a TradFi guy with a capital bull, no matter if you're rich or poor, like you want some kind of cash reserve to base a, Bitcoin yield. It's an outstanding product.
Yeah, I mean, I think at the end of the day, people need to wake up to the fact that Bitcoin is not a social network. Most of the networks that we've experienced as humans to date, things like phone lines and Facebook and the internet itself, these are social networks to a large degree, where the network becomes more valuable with each human that enters it. But the truth is that Bitcoin is a monetary network. A billionaire that adopts Bitcoin is more valuable to Bitcoin, is more beneficial to the world and the inevitability of Bitcoin solving the money than an individual with $1,000 net worth. Yes, maybe the person with $1,000 net worth, relatively needs Bitcoin more because they are, living paycheck to paycheck. They can't afford to bleed out their purchasing power to inflation, and the billionaire would be just fine. But to Bitcoin, the $1 billion invested in the network is more valuable. It is a monetary network. And there's a lot of money out there that has not been able to create a Bitcoin login and sign into their account until now.
100%. And it's like, and I think Fong talks about it a lot. It's just about distribution now. Like if they just have to uh go on every single door and like have the distribution say out like so like every broker, every bank can just like offer this stretch product in the app and like it's floodgates from there. It's that's what I personally believe. I want to just quickly ask you before we are at the end of the time about the new product that you're doing of Solana. And I looked at it. I'm like, oh shit! Like if I would have a home, I would probably do that because it sounds like an amazing deal. But yeah, I don't. I unfortunately or fortunately don't have a home. Fortunately, I don't have the problem that you're solving. What are you doing with Solana, and what are you kind of like? What was your transition also from Acropolis to Savannah?
Yeah, so like you said, for those that don't know, I was the C until just like a month ago, I was the CEO and one of the co-founders of Acropolis, the Bitcoin Treasury platform that does multi-institution custody for a lot of private and publicly listed entities. And recently joined the team at Savannah, where I'm now chief operating officer, because it was just too exciting of an opportunity. I'm a huge believer that the intersection of real estate and Bitcoin presents perhaps the largest total addressable market in the world. Definitely in the United States, it's a massive, more than $50 trillion market where a lot of boomer net worths and total net worth on a percentage basis for folks is tied up in their homes. But there's not an easy way to, tap the home equity value to buy Bitcoin for those who are underexposed to Bitcoin or are Bitcoin curious, or perhaps are Bitcoiners with a home that just want more Bitcoin. And so, what Savannah does at Savannah.io is we offer something called the Bitcoin Investment Partnership, where you provide a lien on your property, we agree on the duration of the period, and you've once you've provided the lien on your property, we buy Bitcoin with our own money at Savannah, and you share in the upside. The only way you lose money is if Bitcoin, when we buy it, is at its absolute peak during the duration of what is our typical 5-year term. So if we were to buy Bitcoin, and Bitcoin is never higher than it is 5 years later, then you would have to make the difference. You'd have to write a check for the downfall in the starting Bitcoin position. But anything up, which most Bitcoiners believe Bitcoin will be at a greater price in 5 years, especially if you're entering these positions during a drawdown like today, where your home equity value is still as high as ever. But now you can enter these positions at a 70K Bitcoin price. uh, we split the upside with you. And our typical product is a 50-50 upside split with the homeowner and a 5-year duration. So, we might be a little bit flexible on those terms to get more deals funded and get the flywheel going, but we have closed our initial pilot BIP, our first Bitcoin investment partnership. So, this is a product that we're really excited about because it allows all of the trapped home equity that wants more Bitcoin exposure to do so without having to come up with any upfront cash, no interest, no monthly payments. Basically, you just record a lien on your property that is equal to the starting investment amount. You can close your eyes for 5 years. And when we close down the position, we'll write you a check for half of the upside. So it's basically on one side of the transaction, you have um, you have folks with conviction but no capital. Those are the property owners because they're fully deployed into Bitcoin, or they just don't have the money to buy more Bitcoin or take on an interest expense by mortgaging their property. And on the other side, what we're offering on the other side of that transaction with our capital partners is uh, it's capital with no conviction. Because of the lien on your property, they have full downside protection because you are making good in the downside scenario, and they're getting 50% Bitcoin upside. So this is another great thing, as the general conversation has been today, of allowing capital pools that have not yet gotten Bitcoin exposure to start getting Bitcoin exposure in a way that they are comfortable with, in a risk managed way according to their guidelines. We are approaching capital pools in a way where we can basically say, hey, you are under allocated to this asset class. You're scared of the volatility or the Bitcoin dies and goes to zero risk. We're going to give you full downside protection backed by the home equity on the other side of the trade, as well as the Bitcoin that we buy. And you're going to get full downside protection with 50% Bitcoin upside, and the homeowner gets 50% upside and not have to come up with any cash, no interest expense, no monthly payments, no debt. So we think that Savannah sitting in the middle creates a really compelling intersection between real estate and Bitcoin.
Where does the liquidity come from? Is this like a partner bank or something like that?
So there's a lot of different options in terms of the capital partners. So you could imagine pension funds, family offices, insurance companies, basically anything that can't really take principal risk, but really needs to start outperforming the pace of inflation. This is a great way for them to, with full downside protection, get Bitcoin exposure.
Interesting. Yeah, I love that model because especially if you have home equity there and you do it over 5 years, which you have to time the market very, very good to not make money on that. Like, it's like it's almost like a hard job. Like that's a bet I'm willing that I'm seeing winning all the time. Like 5 years being in Bitcoin and being down is like a very hard. You have to hit the absolute top and the rock bottom after like 5 years, or maybe it happens. But yeah, even now, let's see, what are we now in 5 years? Because now we are, I think not that much up. Yeah, like we are now up 15% over the past 5 years in Bitcoin. Even at
This has
that,
been like the bad 5 years too, you know?
it's been a bad 5 years. Like it's been very bad 5 years. I think any other 5 year period is like a lot better. And so, yeah, it's a no-brainer, I think, for people to do that, and it's an interesting product because it doesn't require debt at all, and your risk is so little. Like if you are convicted of Bitcoin, like your risk is really like very low. It's a really interesting one. That's why I think I wrote you when you sent me that you are working at Savannah. Then I'm shit. Like I wish I had a house right now. Like I would live in some.
Yeah.
Thank you so much, man. You are bringing a lot of insights and knowledge to me and my audience here. Already before with strategy pilling me, and now with going deeper down that rabbit hole with me. So thank you so much for that. As you know, we have an end routine where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And this question, I have to say that I really did not select it for this episode. It's a very a lowball question for this episode that we did, and the question is: if you had to pick one asset outside of Bitcoin, what would it be?
Yeah, easy. You know, I'm putting in the proof of work myself during this bear market. I am DCAing into MSTR. The longer it stays at these depressed prices, the happier I am because it's just so massively mispriced. And I see the bounce back, and then, like I said, at least a $2 trillion market cap in the near future. So I am buying MSTR. You should always have your cold storage Bitcoin first, but once you're done with a significant fingertip stack, I am focused on as MSTR accumulation.
I love that. Yeah, I'm also trying to increase my MSTR percentage of my overall portfolio, but it's hard. I've accumulated for a very long time Bitcoin, and I'm not selling a Bitcoin for strategy. That's my only rule. I don't want to sell my Bitcoin for strategy. So all the strategy that I'm accumulating is with fresh capital that comes in, and it's just like very hard to start from zero. But it's a
Yeah.
great time to start from zero. So thank you so much, Chase, for being on the podcast. Before I let you go, where can people find you, find the companies you're involved in, and reach out to you to ask some questions.
Yeah, so on Twitter/X, I'm just at Chase Palmieri. You can find me on LinkedIn too. Very easy to reach. Happy to talk to anybody in the space. And if you're interested in Savannah, because either you're a property owner that would like to tap your home equity to get more Bitcoin, or you are a pool of capital like a family office that would like full downside protection but asymmetric Bitcoin upside, then please reach out to us. You can go to savannah.io or email me, chase@savannah.io.
Awesome. Thank you so much, Chase, for being on the podcast. And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.